Hey, everyone, and welcome to the Quality Investing Podcast. My name is Jake Barfield, the host of this podcast and the founder and portfolio manager of Asheville Capital Management. As you probably know by now, I record episodes on an infrequent basis, as making podcast episodes is not my day job, nor do I want it to be. Instead, I focus the vast majority of my energy on managing the Asheville Capital portfolio on behalf of my clients. This podcast is an attempt to highlight interesting businesses that I have found in my own travels over the investing landscape. And so when I publish an episode, it's not because I have a deadline to hit, but rather because I have something of actual interest that I would like to share. Today's episode is a perfect example of that. We are going to be highlighting Shift Inc., a Tokyo-based business that provides quality assurance testing services to the Japanese IT industry. As you are about to learn, the Japanese IT industry is incredibly different from that of the US IT industry. Japan has the world's second largest IT industry, measured at about 16 trillion yen, or approximately 100 billion US dollars. Yet it is generally highly antiquated, with a system of outsourcing in place that is boggling to the American mind. Shift steps into this large, fragmented, and huge industry with a compelling value proposition that has allowed them to grow at an extraordinarily high rate for the last 20 years since the company was created. In the last 12 months, Shift has produced approximately 100 billion yen in revenue, or 667 million US dollars. That is a 1,200% increase in total revenue over the last 8 years. Not only that, but Shift is accomplishing this while remaining profitable with impressive returns on total capital, which were 33.5% in 2023. Only 6 companies in Japan have grown earnings per share by more than 20% in each of the last 5 years. Shift is not only one of the companies within this elite category, but it is also leading the group with the highest growth rates and returns on capital. For reference, only 3 companies have achieved the same feat in the United States. Clearly, Shift is doing something unique that is allowing them to grow at an extraordinarily high rate, capital efficiently. As you're about to learn, Shift has some very attractive avenues for the reinvestment of capital at high returns on incremental capital in both the organic and the inorganic lanes. The question is the degree to which that is sustainable going forward. With that in your minds, I will now turn you over to the interview with Taichi Hattori, CFO and board member of Shift Inc. Taichi Hattori, thanks for coming on the Quality Investing Podcast. It's fantastic to have you here.
Great. Thank you for having me.
So I think to start the call out, it would be really helpful to hear a little bit more about your background and sort of how you got involved with Shift.
Gotcha. So again, my name is Taichi Hattori, CFO and a board director at Shift. I joined Shift in 2021 July. So it's been almost 3 years. Then I'm currently overseeing corporate functions, including finance, legal, M&A, etc., etc. Then before Shift, I used to work for the American-based tech company called Indeed, which is owned by the Japanese company called Recruit Holdings. I joined Indeed in 2012 through the M&A process, which is conducted by the Recruit Holdings. Then I was on the recruit side. Then after the closing, naturally, I joined Indeed and started working in the finance department. Then I became the CFO at Indeed. So it was slightly over 8 years. It was amazing experience working in American tech companies. However, I decided to come back to Japan and found out that Shift is one of the fastest growing company in Japan with the massive opportunity and also the upside. So I kind of felt that, the other choice was, continuously working for a Recruit Holdings, which is, I believe, another, one of the amazing opportunity for me. But I decided to, choose the more challenging but the high upside path, which is the working for the, Shift.
Okay, awesome. So most of my listeners have never heard of Shift, but I think before we get into Shift's specific business model, I think it's really helpful for people to understand the particular nuances of the Japanese IT industry. And I think you're the perfect person to ask this question, given your experience in the American IT industry as well. Can you help us understand what's different, what's similar about these two industries?
Absolutely. So IT market in Japan is firstly big. It's about 16 trillion yen JPY market. Just for your reference, our core business is quality assurance. Then QA market is about 5.5 trillion yen market out of 16 trillion yen. The characteristic of this market, which I think is extremely different from the situation in US, is that firstly, this is ultra super outsourcing heavy market. I believe the many large enterprise in US, they treat IT department as kind of profit center or strategically important sector for the business. However, historically, Japanese large enterprise company, no matter what type of the vertical they are, finance sector, distributor, manufacturing business, IT department was a pure cost center. And as a result, good engineers, they do not choose those legacy large enterprise company to make their career progress. Then instead, they rather go to the a company like a big system integrators such as NEC, NRI, Fujitsu, maybe Accenture. That created ultra super outsourcing heavy market. That's one side. Secondly, the way this IT market is structured, this is super deep multi-layer pyramid structures. Typically, very few prime vendors, I just gave you the name, they own entire enterprise customers budget, make it black box, then keep subcontracting actual development testing work to the second tier, third tier, fourth tier subcontractors in the market. So that created extremely inefficiency in this market. You can imagine customer have to pay up to seven companies SG&A just to outsource the project. That's one. The other side is this is another I feel extremely different situation between US and Japan. But my experience, you guys or the American company treat engineers who write the source code with respect. It doesn't seem like happening in this country, unfortunately. You can imagine the guy who is an engineer working in a fourth tier subcontract with the skill set, who can build large complex systems such as a financial system, because of having three subcontractor above his company or her companies. Their unit price gets a lot of pressure. Unit price means revenue per engineers. Then as a result, they don't get paid well. Their compensation get pressures, right? So that we feel as the extreme kind of upside opportunity for Shift, but that is a current situation in US. Well, one more thing I forgot. This is ultra super demand heavy market. DX situation in Japan, unfortunately, is maybe 10 years behind from what you guys see in American enterprise companies. Then many of the large enterprises in Japan currently, they are eager to make the investment to transform their business to catch up with their more like a modern style of that productivity, which got to be enhanced by the IT investment. That resulted in again super high demand. However, limitation is a supply side. So it is rather competition is happening on the hiring side instead of a customer/budget acquisition side. So I'll stop here.
So just to clarify, DX, you're referring to digital transformation, right? So there are a lot of companies that have antiquated infrastructure who are trying to digitally transform that with solutions like the cloud and things like that. There's new products in which they can upgrade their infrastructure.
Absolutely. If it is okay, I can give you one example, which is typical. I know one very large enterprise company in Japan. You guys know the name. They are utilizing at least over 25 years old crappy MS-DOS prompt-based ERP-ish type of a system, and they are struggling so hard to getting out of that situation. So that's one of the good example why they got to do it. You can imagine how inefficient that type of a system is. Nobody understands why even that system is working right now.
Yeah. So to make sure I understood what you were describing earlier, you were talking about how companies in Japan outsource their IT. And I think you were describing a pyramid structure. So if I'm a large company, and I have a big project that I need done, I will outsource it to
Right.
somebody else to build it for me. And those people who I outsource it to will outsource other bits and pieces of it as well, right?
Correct.
Okay.
That
And how many outsourcing layers will some of the larger projects get to?
up to 7.
Up to 7. And so does that mean 7 different subcontractors?
Yes, that's exactly.
Or potentially it does? Okay.
Yeah. Doesn't that sound crazy?
That's an enormous amount of to have 7 different companies working and building one tool for one company.
Now,
I imagine communication across those 7 layers has to be extremely challenging.
well, that's why another probably the difference in US versus Japan is right now gradually US the methodology around software development in US is gradually moving toward more agile based development instead of waterfall development. But in Japan, due to these situations, managing the project with the agile development model is extremely challenging, and which resulted in 90% of the current IT investment in Japan is done in waterfall way. That's another clearly waterfall is not most modern development style, right?
Mm-hmm.
So there is a lot of limitations in this and inefficiency in this market due to this structure.
It blows my mind, honestly, when I first came across Shift. And part of the reason why we're having this conversation is it took me so long to wrap my head around this, because if I was building a software company in the United States and I outsourced, or if my boss found out that I outsourced technology development to somebody else, I'd be fired. Yeah, and it's just it's so difficult for me to wrap my mind around this fact that people outsource their projects, subcontract it, as if they're building a house or something like that, and they have like an electrician do this and a plumber come in and do this. It's kind of crazy.
Well, to be a little bit fair to the Japanese large enterprise, they are trying to insource it, right?
Yeah.
Because clearly, how can I say? There is this situation is called vendor locking. Nobody wants to be locked to your budget by outsourcer, right?
Yeah.
So clearly, customer gradually wants to unlock this situation, and that's part of the reason. Maybe I can discuss in a later conversation. But
Yeah.
a lot of shift revenue is coming directly from the end user customers instead of being a contractor to somebody else. Then a part of the reason why is that not just we are efficient, but also customers, they want to unlock the vendor locking.
Okay.
Yep.
Got it. So let's talk a little bit more about Shift now. So can you talk a little bit about what Shift's business model is to address this outsourcing industry?
Got it. So we started scaling our business by providing quality assurance / software testing service to the customers, software development. Then again, as I said, about 1/3 of our engineering time is spent around quality assurance in the IT market out of a 16 trillion yen market. So that means 5.5 trillion yen is spent on quality assurance. Then we have been growing our business. There are several reasons behind the scene. One is that, first of all, historically, software testing was done by SIers. Large, again, as I said, either that's prime vendor or subcontractor, that's done by the outsourcer. However, from their view, QA work or testing work is not their core business. The majority of their engineers are the developer, right? Then they don't like QA. They don't want to do testing. So then that resulted in a lot of inefficiency, just laboring this work on the testing side. That's where our founder realized that there could be opportunity for us. Then what he did was, number one, building a best practice with the testing tool. Then secondly, we identify what type of the skill set or potential is required to execute software testing. In a way, we established the testing process. Then, by utilizing that, let's say the skill set evaluation model, we started hiring the people who has that type of a skill set, and that's a starting point of the scale of the business. Um, then over the time, we have been growing like a 50% year by year in the testing market. Firstly, we started penetrating heavier in more like a consumer-facing web services or entertainment service such as online gaming. Then what we realized the time around maybe year 2017-ish was that there is a even much bigger opportunity sitting outside of those sectors, which is like a financial sectors or distributor, manufacturing business, even government. At that time, we had a small number of those customers, like a big bank. Then they started utilizing us and telling us that, hey, Shift, you guys, you guys perform well. I'm gonna scale their budget to spend you. So you need to hire more people. Then we decided to invest into the hiring the people who can open up the large enterprise accounts in the other vertical. That created another boost of our revenue growth. Then simultaneously, what we started seeing is that customers, when they are satisfied with their QA or testing work, they gradually started asking us, "Hey, Shift, can you guys provide us like a consultation service so that we can mitigate the risk of that quality issue in the project? Or can you guys provide us like a project manager? Because right now I have to manage more and more vendors because I don't want to be kept locked in by the single vendors." So by hearing those, another type of the request, we started diversifying our hiring, not just hiring testing engineers, but also started hiring more senior level of the experienced people like project manager, security engineers, consultants. As a result, that give us the opportunity to start providing more like a cross-sell type of the service and gradually becoming not just a testing player, but also the comprehensive IT service provider. And also, we started becoming more and more active around merger and acquisition. Historically, we acquired over 30 business in the past. Then we haven't acquired single testing players. All the acquisition we made is a developer with a certain unique skill set. Then that make translate our current the shape of the business, which is about exceeding 10 billion JPY in revenue in this fiscal year. So it's a long explanation. I'll stop here.
Yeah. Okay. So you started out, there was these system integrators, these people who it was outsourced to, and testing was a large percentage of their time. And you took that off their plates. You found ways to sort of rinse and repeat this process with best practices to make it more efficient, find more bugs, and fix them in faster time.
Yeah.
Okay. And over time you've expanded. Now you're doing consulting and things like that. And that's about 10% of sales right now.
Yes.
You said about 10 billion yen. You're doing about 100 billion yen in the last 12 months, something like that.
Let me walk you through a little bit. 60% of the Shift revenue right now is generated by the Shift parent. 40% is generated by the group company. Then 10% of the total, which might be sitting in a Shift parent revenue, is coming from like a consultation type of the service.
Oh, okay. Got it. Can you describe just, you may have already done it. Can you just help me understand the difference between the parents doing 60% and the group doing 40%?
So what parent does is clearly testing is still a large chunk of the business, or the majority chunk of the business. However, as I said, we started offering different type of the service, such as a consultation, security service, infrastructure service, etc., which is actually growing faster than testing revenue growth. Then group company, large chunk of the group company is providing a development service, such as the system integrator. So
okay,
that.
Okay, so you went from just testing and debugging the code to now you're actually building some of the code yourself.
Correct.
Okay, got it. Got it. More recently, there's been pretty significant developments in artificial intelligence. And I think there's a lot of discussion out there. There are a few people sort of on Twitter that follow Shift, and there's a discussion around it. And the most common discussion that I see is that AI might be an existential threat to this type of business model. The debugging and also the building of the code and things like that. Obviously, as we've already discussed, the Japanese IT industry is so much different than the United States. Can you talk about the ways in which AI might be a threat to Shift's business, and other ways it might also be beneficial?
Yeah. So from our view, first of all, what Shift has been providing is not just staffing the engineers to the end user customers to fulfill their labor shortage demand. What we have done or have been doing is providing a quality assurance service. So we are not just hiring right people, but also we have been investing into the testing platform, which trying to improve the productivity with the people with the skill set. Then, for example, we are utilizing the testing tool, not just engineers doing whatever they want to. Then also we have been automating some of the testing process, such as repeatable process or simple process. If we can automate it, we just did it. Then AI is actually one of those. We started utilizing AI tools such as ChatGPT, and also even our own proprietary AI model built by one of our group company. Then I'll give you an example. So in a testing project, there is a process called test planning, which we need to create the test documentation which articulate what type of the test has to be done in the actual testing phase. Then what we did is comparing the performance between ChatGPT 4 versus our own proprietary AI model to automatically generate those test documents. Then at the end of the day, what we found is that our own proprietary AI model is performing even better than ChatGPT 4. So what I'm trying to say is that if we don't do anything, I think somebody does it. Then our testing model may be disrupted by those someone who has been aggressively integrate with the AI type of a solution. However, our management intention is we are willing to or committed to be ahead of anybody in the market in a QA side to automate or gain the most efficiency and productivity. Then why not utilizing ChatGPT-ish generative AI model so that we can enhance the our productivity of the engineers. So I don't feel that's a threat. I rather feel that's an opportunity as long as we keep committed to make sure gain the productivity and performance of the engineers.
Yeah, yeah. Interesting feedback, and that's interesting to hear that you compared your own proprietary system with GPT. It sounds like maybe because your proprietary model was purpose built for specifically what you're doing,
That's
makes it.
Yeah,
Go ahead.
right. Yeah, that's absolutely right. I'm not, how can I say, disrespecting the ChatGPT 4. That's an extremely powerful tool. However, it's a very generic. Then specific process such as test document creation, our own proprietary model is just tuned to make sure generate with the accuracy, speed, and also the cost efficiency. So that's why our own proprietary model is powerful in that in test document creation.
I imagine there's few people in Japan who understand the documentation and planning side better than Shift.
Yeah.
And exactly what you need from an AI model or something like that. Okay.
One more thing, if I can add.
Yeah, please.
If you want to have generative AI to perform well, not just building the right algorithm, you need a massive amount of the right data in place, right? There is no testing data available in public, right? Because it's usually done in a secured environment. Then, however, we have it, right? We've been providing testing service over the past 10 years with the scale. So we have a massive amount of the testing data point, which give us the competitive advantage that not just building our own proprietary model, but also we have a data which we can feed into and educate our AI.
Mm. Mm. That's great. So shifting gears just a little bit. A couple of weeks ago, I ran a screen, and I don't run screens very very frequently, but I just thought it'd be really interesting to see how many companies have grown earnings per share at greater than 20% in each of the last 5 years. And I found 6 companies in Japan that were on that list, and Shift was one of them. So I'm just going to throw out some numbers here. So you've grown earnings per share at a 43% annualized rate over the last 5 years, from 60 yen per share in 2019 to now more than 350 yen per share in 2023. And in that time, I think this is actually the more impressive statistic. In that time, you've increased returns on capital from 13% in 2019 to 34% in 2023. So, first of all, congratulations. That's an enormous feat. Only 6 companies have done that.
Thank you. I'm proud of it.
Yeah, it's great. And secondly, can you help me understand what has fueled not just this earnings growth, but this increase in return on capital? So you're growing your earnings, but you're also doing it efficiently.
So I think at my highest level comment is we have been investing for the growth with very tight discipline. Then, for example, historically we have been investing from the SG&A budget. We usually spend about 21 to 22% of the revenue into the SG&A. Then we split SG&A bucket into the 2 buckets. One is what we call the strategic budget, which is the revenue acquisition investment for the growth, including number one, hiring, right? Clearly, our revenue model is number of engineer multiplied by with the unit pricing per engineers. So hiring the good people is critical for the growth. And also, of course, sales is part of those strategic budget, and also M&A related expense. And last but not least, we are very much like a human capital business model, which means not just hiring people, but also train them to get them more productive, to gain the higher unit price, and also retain them to make sure the maximize lifetime value. Those things are super critical. So therefore, we count HR department who is committed to move the needle around those type of the metric as part of the strategic budget. Then another bucket is what we call the operating budget, which is including someone like me, finance, people or at the back office people. Then we have been scaling strategic budget probably 1 point against revenue every year. Then we utilize those saving to even accelerate our revenue growth. To transfer that into the strategic budget, such as investing more into the hiring, more into the sales, which even accelerate our revenue growth. So that's one of the example of our discipline. And also, again, we are maybe you can say we are a labor intensive model. We rather feel that's a human capital business model. So cost per hire, that's an input to the model, and also lifetime value generated by the each employees. That's going to be the generated revenue, right? And also the gross profit. So we have a formulaic approach here and there for every single investment that resulted in growing or improving our gross profit margin over time, and also improving our operating profit growth. So that's one side. The other side is you can imagine as a result, we have been fairly profitable over the past 10 years, which resulted in piling up the cash on the balance sheet. Then what we did is utilizing that cash to execute merger and acquisitions. As I said, we have acquired over 30 companies in the past, but also, we invest with the discipline. Same thing goes to not just P&L management, but also the M&A. So we have a very tight, pricing philosophy, which our guideline is invest no higher than 8x EBITDA multiple. But most important thing is we try to have those newly acquired companies contribute our EPS from year one. That's our guidance. The reason behind the scene is the large chunk of our M&A is acquiring SIRs ish business. Then under this demand heavy market, if there are right engineers in place, the revenue is going to be there. Revenue is not going to decline. So that's why we are utilizing 8x EBITDA multiple model. But again, idea is contributing to the EPS from the year one. So P&L growth, balance sheet investment growth. So combining those two resulted in pretty, maybe I shouldn't say this from my side, but a pretty impressive EPS growth and also that return on capital in the past few years.
How confident do you feel in your ability to maintain or even improve upon your return on capital going forward?
So there are several aspects, but I think most important thing is how big remaining opportunities are in the market, right? This year we're gonna be reaching to the 10 billion JPY in revenue. Then just to remind you, our addressable market in total IT market is 16 trillion yen. Then 5.5 trillion yen is the software testing. We really feel we are just scratching the surface. Even though our biggest spending from the customer's share of wallet standpoint, probably our current biggest budget customer is about 2 billion JPY in annual revenue or annual spending to Shift. Then what we know is that there are like 50x remaining budget sitting in a single customer side. So overall, what I'm saying is there are still massive upside in this market. So the ceiling over the market is not an issue for us to continue this growth. That's one side, which is I feel we can justify or continue to maintain same type of the growth over the coming years. The other side is M&A opportunity. There are about 15,000 SIRs in Japan. So this is very very diversified or at a fragmented market. Then 5,000 of the out of the 15,000 SIRs, founder or the owners, they are about exiting the business due to the age. Then this is a massive society issue in Japan. Somebody has to take over those business, but because of that lacking the successor of the business, many business are how can I say they are just about finishing, right? Then we are acquiring those business. So again, from the M&A side, opportunities are there. Then so that make us give us the high level of confidence that we can maintain continuous growth on the both side.
That's really interesting. So on the organic side, it's really just a factor of hiring more engineers, being able to get them efficient, and keeping them around once they're efficient, basically. And the price that you charge, you bill per customer. That's the organic side.
Right.
The inorganic side, what you're telling me is there's an aging population of these system integrators, your customers very frequently, and they have limited options when they're aging. They want to retire. They've ran their business for 20, 30, 40 years, maybe. I don't know. Maybe. And they face very few options for what to do with their business. It's either shut it down, and they have a revenue stream. They have customers that they've been servicing for a long time, or sell to somebody or sell to somebody like Shift, is there a bunch of buyers in this space, or is it? Go ahead.
So there are buyers for sure. So there are certain competitions, but we are still able to manage to acquire kind of number of the business which we are quite satisfied. So we know how to win the M&A deal.
Okay. Got it. And you're confident that you can acquire these businesses at attractive enough prices to A, contribute to earnings per share in year one, and B,
Yes.
maintain similarly high returns on capital.
Yes.
Okay. What is the primary obstacle to future growth over the next, let's call it 5 years? Let's say we're having a conversation 5 years from now, and Shift has not done well from a business perspective. What do you think is that cause? Is sort of another way of asking what the primary obstacle is.
So one of the thing, especially we started trying to make the adjustment around our business to the customers' direct demands we are facing right now, is that over the time, which is actually great for me or for us, but instead of customers just thinking us as the testing service provider, they started treating us more like a digitalization partner to solve the customers management level pain point. Then to solve or to meet those requests from the customers or expectation from the customers, what we realized again, especially in this year, is that we need to attract more senior level, professional level engineers to acquire those type of the requests from the customers, which typically is requesting for us to work on large projects such as ERP integration as an just example, but also that super legacy system migration to the more like a modern environment. Those are a big budget project, but requires more professional level skill set engineer. For example, like a project manager who has the experience to manage the large project in prime vendors, or engineers who has the experience to build the large complex system, etc., etc. So now we are trying to hire more like those people instead of junior testing engineers. Then, if we fail to attract those talent in the coming years, that's going to be the big obstacle for us to continue this growth.
What alternatives do these high quality engineers face versus going to Shift? Is there a pretty wide range of opportunities in Japan like there is in the United States?
So I think I described that competition is more happening on the hiring side. So the type of the engineers I just described, they have a choice. They have a lot of good options to make their career progress in the different companies. So we got to make sure there is a reason for them to join in Shift.
What about acquiring businesses? You've talked about acquiring. You've acquired a lot of businesses. Could you acquire talent? Is that ever a factor when acquiring a business?
Well, our acquisition is not just acquiring a revenue, but we are acquiring the talents, right? Unless there is a talent, the target company is not sustainable, right? If they don't have a good quality engineers, I don't think their revenue is going to be sustainable. So we are acquiring talents.
Okay. Let's talk a little bit about who you compete with and what are your competitive advantages against any of your competitors?
So historically, especially around the testing side, we have been saying that testing market in Japan is blue ocean. So we do not fear competing against anybody, especially in a large enterprise market. However, there is one area there is a competition, which is the entertainment. So we call the entertainment segment, which is like online gaming is the typical customers or the business in that segment. Then there are several two notable public companies who are dedicated to the those in that segment, providing testing service to the online gaming or the consumer gaming service. But currently, for us, it's way less than 10% of our total revenue coming from that market. So that again make us feel that we are not we are not facing a kind of fierce competitions in each market.
Okay. Okay. Maybe just to wrap up our call, I'm running short of questions here. Is there anything that we haven't discussed yet that you think is important to understand as it pertains to Shift?
No, I think we covered well. One thing I want to add to the my explanation, follow up comments, if that's okay.
Yeah. Anything you
So,
want.
yeah. So again, historically, Shift has been regarded, or people think, or business think Shift as the testing player in the market. But now the view is really changing. As I said, the market and the customers started treating us. A test is a core service, but the Shift is gradually becoming more and more comprehensive IT service provider. Then, and also I explained that we are changing our gear around hiring, more, focusing into the hiring professional level engineers. Uh, the what what's good about that adjustment is we really started accelerating those hiring in this year. Then
Okay.
we are beating our target right now. So our hiring capacity and capability, I think I said this at the beginning of the conversation, but I used to work for Indeed. So I know how hiring works, and also I'm from Japan, so I know how hiring works in Japan. Shift hiring power is really, really strong. That's one thing I felt kind of missed in the conversation. So even though I described, Jake asked me what's the biggest obstacle in the future. Becoming more attracting those professional level engineers could be challenging, right? To which make us transform us into more comprehensive IT provider in the future. But by having an extremely powerful hiring team in-house, we are able to make adjustment. And so far, we are making great progress toward it.
Okay. Got it. So primary obstacle, you're getting significant traction on right now. You've shifted very heavily in the last year, and you're having some success on that front is what you're saying.
Yeah, that's what I'm saying. Thank you for the
Okay. Yeah. Yeah. This has been a great call. Thanks so much for taking the time.
Thank you,
And
Jay.
yeah, I think Shift's such an interesting business. So I'm grateful to have you come on and explain it in simple terms for me.
Great.
All right. Have a great rest of your day.
You too. Thanks. Bye-bye.
Bye.